Hello and welcome to Earnings Call Preview, a show where we try to figure out what India Inc. will do in Q3 in terms of reported numbers and what the intricacies of the reported numbers would be. It's an effort that we started off last quarter wherein we get in two eminent experts, one from the buy side and one from the sell side, to talk about what they believe specific sectors and the large cap and the mid cap spaces would do in terms of numbers, and where you as an investor or what you as an investor should watch out for when where these numbers actually do come out. So today on the show, it's a very tricky quarter, mind you, because there are a lot of uncertainties and the markets are delicately poised as well just before the numbers come out. From the buy side, we have S. Naren, Chief Investment Officer of Equities at ICICI Prudential Asset Management Company. Naren, great to have you. Thanks so much for joining in. And from the sell side, Manoj Singla, Managing Director and Co-Head of Products at Religare Capital Markets. Manoj, great to have you as well. Thanks much. Naren, start off with you first. It's an interesting time wherein the Q3 numbers would be released. More so, it's a very uncertain quarter because it will have ramifications on how the FY12 EPS estimates also get toned down by or taken up by. What's your sense on how the quarter would be?
See, the sense is over the last two quarters, I think when results are, expectations have been brought down very significantly. In fact, I think barring a few consumption sectors, I think and maybe the cement sector this time, the expectations have been brought down to very low levels. Of course, this quarter we are going to see better performances due to currency impact in sectors like technology and pharmaceuticals. But other than that, the expectations are just not there. So I think, it is not that anyone is expecting, there used to be a period a year and a half back where people were expecting one set of numbers, and if that didn't come, the stock could get derated. Now everyone's expectations are going down and people have cut the stocks, mid-cap stocks have come down 40%. And therefore we are in a situation where I think we are not at too much risk except a few consumption sectors.
Manoj, what's your sense? You've done some number crunching as well. Where do you think we would be in terms of how the index EPS would be at the end of quarter? And do you expect that after the numbers come out, there might be some scaling down of that as well?
Yes, I think I agree with Mr. Naren that a lot of muted expectations are already in the share prices. Having said that, you always tend to see sell side cutting numbers with a lag. So what will typically happen is, I do think you will see some estimate cuts, not because people don't expect it, but just because people are waiting for the numbers to come out and then cut numbers.
Sub 1200?
Definitely. I think we definitely think that we will come to sub 1200 for the Sensex post this quarter. But my only view is that a share price is already discounting that. And in fact, a lot of share prices are discounting that. And so I don't think shares will react to that. But yeah, you would see some estimate cuts.
Since we are optimistic people, let's start off with the sectors which might actually do well in the quarter. And Naren, I think the biggest buzzword this quarter is the rupee. I mean, it was loud last quarter. It's gotten even louder. And I think it has had some really positive ramifications on certain pockets. And let's start off with the obvious suspect, IT. What's your sense, one, on how pure business would be, and two, on how big a factor would the currency play?
The results will be fantastic in EPS terms and profits terms. The question is, the sector is very well researched. So if you ask Manoj, the numbers that people look at is quarter-on-quarter dollar revenue growth.
Right.
And that's a number where again people have cut down expectations. If you see over the entire quarter, the kind of expectations that people had, I think from October to now, the expectations are down. And even there, I don't think a slightly muted number won't affect, because people have already considered it. So I think always January tends to be a good period for technology, and this year also it appears to be at this point of time.
Manoj, how do the numbers stack up? Because the expectation is that Infosys and HCL Tech, because of the fact that they have unhedged positions, would essentially benefit, as Naren said, from on the rupee perspective. The EPS, reported EPS, will be nice. How would you view the numbers as they come out, and what is your strongest bet on in this earnings season?
So I think especially on the earnings, Infosys clearly will gain the most because, as you rightly said, they have the least hedging position. And so we think on a sequential quarter-on-quarter basis, Infosys EPS could grow by as much as even 18 to 20%, which is a significant growth. So I think reported numbers will look nice. But again, I think on the tech sector, a lot of people will focus on what you call the volume growth, which basically will tell you as to how the companies are doing. And on that front, I don't expect any positive surprises. Expectations are low. People are talking of 3-4% kind of volume growth. I think would be in that range. But the bigger thing to focus would be the guidance for March quarter. And March typically has been a seasonally weak quarter for Indian IT. So my sense is you will probably get a muted guidance for the March quarter, which might weigh on the shares a little bit.
In fact, that was my question. The shares aren't exactly cheap. Are you slightly circumspect on any particular stock, large cap, mid cap IT?
See, I'm circumspect on the shares overall as we get into this next weakish trend, because for the next 3 to 4 months, typically you would see IT budgets being set, you would see growth rates coming off. So I do not expect the sector as a whole to outperform overall. And I think, actually, if you think, probably TCS has the maximum hedging position. So if you just look at in terms of the hit that TCS would take, that's probably going to be higher than some of the others.
Okay, watch out for these numbers. Remember, the street believes that certain mid-caps like Mindtree, Hexaware would, on a YOY basis of course, on a QOQ basis will be flattish, but on a YOY basis may even post some really good numbers. The other sector, and again a beneficiary of the currency, Naren, is pharma. Now, you can't paint the entire sector with the same brush, but broadly, for most of these companies, even the business momentum seems to be shaping up fairly well, the large ones at least.
That's an interesting thing. I think in July to September this time we had very muted local growth, and the feedback we've got is that the third quarter growth will be much better than the second quarter growth in the domestic business. So you have currency benefits, you have a lot of one-time income opportunities coming up for different companies, and you have the benefit of a good domestic growth. I think we are in a very sweet spot in pharma. The unfortunate thing is all of us are overweight the sector and that worries me, because we are all overweight a sector which obviously is in its pink of health at this point of time.
So if the results are good, it wouldn't necessarily prompt you to go and buy these shares.
Yeah, it appears like that because everyone is overweight and everyone has been expecting good results. The only thing is, what we saw from the September results is it's not that all companies are actually going to benefit by currency. We have some companies which have shown foreign exchange losses in the last quarter, and that's because they had actually hedged their exports. Sure. So we could have some surprises on the non-operating part because of the way different companies handle their currency positions.
Manoj, any number crunching? Because we hear that Taro price increases would have Sun Pharma revenues, Dr. Reddy's would have a strong quarter because of rupee depreciation. What are you looking out for?
So I think, again, I think we do expect a good quarter from pharma, simply because of the rupee depreciation. Companies will have good numbers. But again, as Mr. Naren very, I think, rightly pointed out, in fact, we think that's a sector that almost everybody is overweight, whether it's domestic mutual funds or foreign mutual funds. So I find it difficult to see more money going into the sector, even if companies come out with good numbers. So there might be a company-specific thing, because one company might report really good numbers.
Which one are you looking out for?
So I think in terms of our view, the company that we are overweight on is basically Cipla. Our view is Cipla is basically, there's a turnaround that's happening in the company that's been visible for 1 or 2 quarters now. And I think these quarters will further confirm that the company is really seeing a turnaround. It's more a domestic story compared to a foreign story. So Cipla is probably our only overweight call on the whole pharma sector at this point in time.
Okay, watch out for Cipla. And the other pocket, I'll come to you, Manoj, first on this one, and that is the consumer stocks. And almost everybody believes that, barring maybe a Titan which may not exactly show the spectacular growth that we've been used to, almost all the others, large ones, mid ones, will show good growth. HUL or the Jubilant Foodworks of the world. Anything that you are bullish on right now?
See, I think on the consumer side, our top 2 picks have been the large caps. So we basically think Lever would have a very good quarter again. I think Lever has begun to beat numbers after a long time, and our bottom-up feedback indicates momentum is continuing at Levers. So I think Lever is one of our top picks on the consumer side. Stuff like, I think ITC would be good. I think a lot of mid caps here, stuff like Marico's of the world, stuff like Britannia of the world, we think will have good revenue growth, and as well as good margin expansion as well, because a lot of these companies have taken price increases, and while there have been some input cost increases, I think it will largely even out. So I think consumer as an overall would have a good quarter, but again, it's a sector that everybody is overweight. So but yeah, I think you would expect good quarter from most of the consumer companies.
So on expected lines, Naren, would you think of looking at this space? If you haven't already, of course, I'm sure you have some of these stocks in your portfolios, but pretty much expected that the quarter would be nice.
No, actually, what we've been thinking is we are possibly at the peak of consumption, and from here on, consumption has to slow down, and we have to see a cycle of consumption slow down. So we've been actually underweight on consumption sectors, particularly on the interest rate oriented consumption sectors. And I think we have to, while the results will come good, I think this is the sector where past may not be an indicator of future returns, and you'll see just the opposite in infrastructure, where the past is so pathetic at this point of time that I mean actually it's no indicator of what can happen in the future.
Okay, hold that thought, gentlemen. We'll just come back from a very quick break and talk about the interest rate sensitives, banking, auto. It'll be a interesting quarter for them, and of course talk about some beaten down spaces as well. Stay tuned to Earnings Call. Welcome back to Earnings Call. Watch out for a few of these companies because it's expected that the results might be interesting, though on expected lines. The construction companies, IVRCLs, JP Associates of the world, expectations of a 50% decline in profit after tax. From the capital goods space, what BHEL and L&T will be talking about, watch out for Voltas because that's expected to show a dismal set of numbers. Let's start off with the biggest one, banking. A bit of a black box because of what may happen below the operating line. And of course how a lot of people believe that NII growth might be subdued compared to the previous 2 quarters. Are you bullish on the banking results this quarter or are you bearish?
No, the results are expected to be good. From whatever feedback we've got, and it's one of the well-researched sectors, there are more than 40 banking analysts in the country. What we're seeing is that this quarter will see very little slippages increase, and you will see a situation where NIMs may be within a band. And actually while the last 3 months have been very bad for banking stocks, there's nothing in the previews of the broking firms which we have seen to suggest that we're going to have a bad quarter of results. The thing about banking is, as we've seen, is sometimes people start worrying about what could happen in 2014-15, and that's what sometimes has dragged the stocks down. But I don't think there's going to be in the results anything that worries us. The only area what people have told us is that there are a few banks with good equity portfolios, and equities have fallen in the quarter, and they'll have to provide for the fall in equities. That's about the only imponderable at this point of time.
Manoj, what about you? What numbers are you watching out for? What names? Because we hear that Bank of India, Andhra Bank, LIC Housing Finance would have a very bad quarter this time around, and the large ones are a bit suspect. What are you watching out for? Which companies?
No, so I think what we think is, if you look at the NIMs, I think NIMs actually have held up for the banking sector pretty well. And again, this quarter we expect NIMs to hold up pretty well. I think the reason for a fall in banking stocks, or there has been a lot of focus in terms of the NPLs. So I think what is going to be watched out for is slippages, incremental slippages, NPLs. And at least in the PSU space, you might see actually a fall in slippages, primarily because a lot of banks had to move to the system-based recognition in the September quarter, and that's out of the way. So in fact, you actually might see, as Mr. Narain said, again good numbers from the banking sector this time around. Having said that, I think the problem is you are seeing a lot of restructuring of loans now. And if you look at the last quarter, I think PNB was a prime example. The numbers were good, the stock was up, and then they came and said afterwards that we had some restructuring and the stock fell after that, right? So I think what one should watch out for this time is actually restructuring, as to how much of restructuring of loans is happening, how much of this is getting pushed back, and so on and so forth. So that's key to watch out for. I think on a stock specific pick, we expect LIC Housing Finance to have a sharp dip in names this quarter. So that's one clearly that we are saying would have a bad quarter. I think on other specific banking names, it's actually very difficult because we have. I think SBI we actually think would be better than consensus expectations, because I think last quarter probably they had a slippage of around 8,000 crores. This quarter we think it will be lesser than that. So I think they might surprise positively this time around slippages in our view. So SBI is actually one of the stocks we like and we think will surprise positively. I think some of the second tier names that you mentioned, like the banks of India and all that, we at least think it's very difficult. It's like a shot in the dark saying who will have higher or lower slippage. Right? It's just a question of how much they recognize and how much comes up. So it's very tough to call that.
Naren, what do you think autos will do? Because it's a clear subsector within a sector wherein two-wheelers are doing exceptionally well. Quarterly results expected to be nice for Bajaj Auto because of the export incentives and the currency. Maybe not so much for the M&Ms of the world, which may just about hold out.
Here again, we are in a situation along with the consumption pack towards a cyclical top. And because of that, you are in a situation where earnings will come out very good. But if you look at the outlook over a period of time, there has to be a down cycle. So that's where we are positioned at this point of time. But from a sectoral point of view, it's very clear. Two-wheelers is the most defensive. Four-wheelers is in the worst shape. And if you look at CVs, they've been holding on, but it's not clear whether they are going to hold on to margins as well. The volumes have held on. And if you see SUVs have done very well and tractors have not done well. So we are in a split situation outside the two-wheelers. But so are the stocks. I think we are in a situation where we believe if you see January, I mean the way the sector moves in future, I think we're going to see some slowdown. I think that's what some of the companies have guided for. And that's why past earnings are not going to be that relevant in this sector as it is going to be in other sectors.
Yep, four-wheelers available at what, 6-7p versus two-wheelers 15p. Manoj, I was looking at your estimates as well, and you guys are bullish on the two-wheeler space as well, particularly Bajaj Auto. I mean, Hero MotoCorp also might do well, but Bajaj Auto is something that you're bullish on. What are you bearish on?
So I think on the auto side, we are bullish on actually both the two-wheelers, which is Hero and Bajaj. I think probably at this price, at this point, we're still negative on Maruti. We still think Maruti has a lot of issues to still sort itself out. I think the competition in the four-wheeler car space remains very, very high.
Even the volumes will be less for Maruti this quarter.
At least for this quarter, yes. But I think that's probably known. So I think what people are looking at is when this corrects, probably for next year, what volumes can Maruti do. But structurally, I think the car space is continuing to see a lot of competition. I think on the UV side, as again Mr. Narain said, you are going to see a slowdown, whether it's M&M and Tata Motors. And so I think we'll have to watch out for that. But I would be most bullish on probably the two-wheelers at this space on a relative basis, because I think that seems to be the most defensive in the auto sector.
And the numbers would be good as well.
I think especially for Hero, we think numbers are going to be good. You're going to see margin expansion. Bajaj numbers are going to be good because of rupee depreciation. So in fact, so both of them will have very good numbers actually.
Okay, gentlemen, stay on. We've discussed some positive sectors. We've discussed the two interest rate sensitives which would matter. We'll take a break. Of course, watch out for some of these companies as the numbers come out. The expectations from some of the houses are that stocks like Adani Power and Ultratech Cement, for that matter, or certain other pockets like Jubilant Life Science or Mahindra Satyam would have a fairly decent quarter. Substantial YOY growth in profit after tax. Stay tuned. We'll come back and probably talk about a few negatives as well, because this quarter is a bit mellow. Talk about a few of those negative pockets as well. Welcome back to Earnings Call. We are in conversation with S. Narain and Manoj Singla. Gentlemen, let's talk about a few pockets which might be indifferent or slightly negative this quarter. Oil and gas. The largest one, we'll talk to Manoj about that, but broadly on the space, what do you believe?
Space in trouble because you've seen an incessant increase in crude oil price, which has stayed in the quarter. Actually, crude oil hasn't gone up in the quarter, but currency has gone up. So the rupee cost of the Indian companies have gone up. You had very limited pass-through on their controlled products, even on petrol for that matter. So we are in a bind at this point of time in the sector, and that's one of the problems which affects the economy. So till a problem gets solved in this, I mean, we are not talking about problems on account of results. It's a problem of the economy, right?
Manoj, I mean, it's pretty much how it is, but leave aside the other stocks. Let's just talk about the big one, Reliance. It made headlines by sadly becoming the second most valuable company as opposed to what it has been. But this quarter, I mean, they've cut petchem product prices, gas output at all-time low. The stock has not done too well. The results not expected to be good either. What's your sense?
Yeah, so I think obviously for Reliance, numbers are going to be bad. I think everybody expects this time the profit would be down significantly, maybe 15-20%. And it's in the price. So I think the important thing for Reliance again is all of us know it's going to be a bad quarter. We need to look for how bad is bad. Again, the focus will shift once they report in terms of what's happening on some of the newer things that they are doing. So in terms of the BP deal that has happened, what's the progress on that, and stuff like that. But I think the quarter obviously is going to be bad from Reliance, and that's probably known. And that's why you've seen the stock correct so much in the last 3 months, right?
But purely on earnings, Manoj, since we are in a show which is talking about earnings, what is your best bet? I mean, you obviously look at a lot of non-index stocks as well. Are there any that you believe specifically will post a spectacular set of numbers, or conversely a very bad set of numbers?
Yeah, I think one sector where we think, which we have not talked about, which will have very good set of numbers, is cement. I think that's a sector that we are pretty bullish on. If you look at the dispatch growth in cement over the last 3 months, that surprised positively. I think prices on cement have surprised a lot of people positively. There has been some softness in the month of December, but that we think is temporary. So that is a sector that we are calling for to actually have a very good quarter, significant YOY growth.
So both ACC, Ambuja, Ultratech, all of these you're bullish on?
Yeah, so I think cement is largely a top-down sectoral call. If we have to take one between all of these, we like Ambuja the most, and that's largely because it's exposed more towards the north than south, where you basically have better pricing. But I think I would single that sector as one where you can see very good numbers this quarter.
Okay, anything which might be a washout?
See, I think in terms of bad numbers, I think as we know, because of the whole interest rate cycle and slowdown, a lot of infrastructure companies will have bad quarter.
Yeah, but any specific names, Manoj? I was just trying to get a sense from you as to anything that you believe will really post a bad set of numbers.
See, I think stuff like DLF and all, I'm really worried about, because I think on real estate you haven't seen a pretty good sales for the whole quarter, right? So I think some of these real estate names like DLF, Unitech might have actually bad numbers this time around. That I would single out. And I think the other one to watch out for is L&T, not so much for the numbers that they will post, but what they guide for, because I think everyone expects them to cut guidance, but I think it's to watch out for how much they cut guidance by and what they say on the order flow growth and so on and so forth. So that would be more on the negative side than positive side.
Yeah, I think people would be hoping they don't go below that 5% that they spoke about the last quarter. But one final word from you, Naren, since we've discussed earnings pretty much. Broadly on the markets, you mentioned that we need these couple of levers to go ahead. 6 months down the line or 12 months down the line, are you more bullish than bearish?
I think the first quarter will be the turning point. In every year, the first quarter is a very important quarter. In the last 3-4 years, maybe budget importance has come down, but I think this year the combination of UP election results plus budget mean that I think we'll have clarity by April 1. I think by the time this quarter's results are over, we'll have a fair amount of clarity than what we have at this point of time, because we are ahead of a fairly crucial quarter. The fourth quarter of every financial year is normally a quarter where a lot of things happen on the financial side. So I think we'll get good clarity by April.
Manoj, 3 years, a lot of people would be bullish. Next 12 months, are you selling India, or are you telling your clients to hold back and wait for better valuations?
So we are clearly telling people to hold back and basically buy into the market at the right point. I think we will get some point in this year and one should go and aggressively buy India. And again, I think the budget is going to be a very important turning point, because after the elections are over, I think one can probably take a call on the intent of this government, what they want to do. And I think if one gets the sense that we are going to get back to some kind of reform agenda, I think clearly it would be the time to go and buy India aggressively. I think the only variable which we cannot control and which I always worry about is oil, because everybody has been calling for oil to come down, and logically it should given the slowdown in global growth, but it's held up much better than what we thought. So I think that remains key in terms of if oil spikes up, that would be single biggest reason for me to get bearish India if that happens.
Okay, just before we wrap up, watch out on these numbers as well. The expectations are that maybe stocks like Aurobindo Pharma, by virtue of a lot of below the operating line expenditures as well, or a Lanco Infra, or some of these paper companies as well, might not have the best of quarters, so the reported numbers will not be that great, but maybe already factored in. At least the analyst reports seem to be believing so. Yes, Naren, Manoj Singla, thanks so much for taking the time out and joining us on this edition of Earnings Call. That's it. Have a good earnings season, and we'll of course track the entire earnings season through the month and the first half of the next month only on ET Now. Thanks for watching.